This is Broderick Brown of FightSlumlords.com, and this is a quick message that I have for all my California followers. If you're buying a new car or a used car, and you have a loan on it, make sure you get gap insurance. Gap insurance is an insurance coverage which will prevent you from owing money on a car that gets totaled out in a car accident. And I'll give you an example. Someone buys a car for $11,000, they put $1,000 down, and so they have a loan for $10,000. They take the car off the lot, they have the car for a month, and they ultimately get in a car accident where their car is totaled. Totaled means the insurance company has determined that the cost to fix the car is more than what the car is worth. And in California, how the insurance company will determine what the car is worth is not by a blue book estimate or anything online. Is that they're going to find similar makes and models of cars for sale within a 30-mile radius of wherever you live, and then they'll expand upon that search depending on how old your car is. So for a newer car, it's likely that they can find cars for sale within a 30-mile radius, and then if your car is like a 2001 or something, so it's 20 years old, they may have to expand that search. And so basically they'll compare your car, the condition, the make, model, whether or not, like for instance, you have leather seats, whether it was stick shift or automatic, and then your mileage and any upgrades that you've made to the car, aftermarket parts, to a car that's similar for sale. And a lot of times that happens to be less than the Cali Blue Book. But what happened in the example that we have, where someone has financed $10,000 and after a month their car gets totaled, their car may be worth $8,000. They may have negotiated a bad deal. Everyone knows that after you buy the car and you drive it off the lot, it's going to be worth a lot less. And so if there's a $3,000 gap between what the insurance company is going to pay the lien holder, which is the bank that is financing the car, that means that in that scenario, the insurance company will cut a check to the bank for $8,000, and that means that the person that bought the car for $11,000 still owes the bank $2,000, and they'll still have to make monthly payments to pay off that $2,000. Whereas if you had gap insurance, your gap insurance would pay the difference, and then you'd walk away and not owe anything. And that's something to consider, particularly if you're not putting down a lot of money on your car. So you're getting into a car and you're not putting a lot of money down, you should make sure you have gap insurance. Even if you're putting a lot of money down, you should make sure you have gap insurance. And so quite often we'll get calls and we'll talk to people and they won't have gap insurance, and it's unfortunate because it's not really that expensive. But if it goes bad for someone and they get in the car accident and they need the gap insurance, it could put them in a financial pickle. So those are my thoughts. If you have any thoughts on this video, please comment below. I appreciate your time listening to this video.